What's up, ladies and gentlemen, and welcome. I am the Crypto Crow. It is Monday. Oh, is it Monday? Yeah, I don't even know what to tell you guys, but it's the start of a new week, and there's been a lot going on in the crypto space and the world abroad. And to be quite frank with you, I'm so drained already. It's been quite a week. This weekend has actually turned out to be very, very good, which I really needed. I really needed a reset. I need a hard reset for a lot of reasons. And this whole week, I'm going to be basically focusing on trying to do daily updates on the world of crypto and everything going on. I am still trying to find myself because, quite frankly, when I was originally building this channel, there were so many really cool projects and great things going on that I was researching on a regular basis, and I am going to be getting back to that. There are a lot of tools and just a lot of different things that that I used in the last bull market, and so I would use those and I would show you guys how I use them. I'm going to be doing all of that stuff again in the future, but until certain things, I guess you could say certain criteria has been met, then I've just ultimately been resorting to covering like what's going on, crypto news, and kind of my thoughts on what's happening and what I think is coming. This video, we're going to be talking a lot. We're going to be talking about Chainlink. We're going to be talking about Citibank. We're going to be talking about PayPal. And we're going to be talking about Clayton of the SEC. But before we get into a lot of that stuff, I want to show you a fun little video, which honestly, it's blowing my mind that this video is as big as it is. And it's not a YouTube video. It's on my wife's TikTok account. But this video, this stupid video, I can't play the audio because it uses licensed music. But this stupid little video has over 8.5 million views, and it's still growing. Now, granted, on my wife's TikTok account, we have all kinds of stuff. She's always pulling me into different videos. This is a video that we basically use. So somebody sent me a smart desk, and they want me to review it on the channel, which I'm going to be doing. But I just thought for fun, everybody's always showing, everybody loves our videos because of our height difference. She's 5 foot, I'm 7 foot. And so I thought it'd be fun because this smart desk is actually pretty badass. And they sent me one for free. I built it. The thing is super heavy duty. And we're even thinking about doing a video with me on the desk. But yeah, I was just raising it up, and like the comments, there are just on this video alone, there are over 23,000 hearts. And the comments are just insane. Like, it's so funny. So anyway, yeah, if you want to see me do dumb stuff, completely non-crypto related, you could do that. This is what we just did yesterday, where I had to basically try and catch her as she jumped in the air. Come on. I mean, that's it. That's our TikTok. So yeah, we have fun with it, and it's a good time, but ultimately it's a bunch of silly stuff. And some of these videos, I mean, we have so many videos on there and the millions of views, and it's hilarious to me. So anyway, read the comments. The comments that's what I think drives the views up, because people reading comments and posting replies. Anyway, just wanted to start the day on a little bit of a fun thing. Crypto bully Clayton to leave the SEC by year's end. This alone is probably going to be responsible for sending the crypto market up quite a bit over the course of the rest of this year. At an expectation, I do believe that 2021 is shaping up to be quite the year for all of us early adopters in the crypto space, as pioneers of the revolution of disruption, if you will. And I really think that look, I don't even have anything against Clayton. I don't really know anything about him. I don't follow everything about him. Some things are just above my head. The SEC is one of them. I haven't always agreed with the way they've approached things, and apparently this is the gentleman at the helm of a lot of that. But the chairman of the Securities and Exchange Commission, or SEC, Clayton, is finally to leave his position by year's end, according to a statement by the SEC. Sworn in on May 4th of 2017, Clayton led a crusade against cryptos, denying a Bitcoin ETF at the last minute, and very much a calculated slap, with the SEC denying during his tenure even crypto ETFs for accredited investors. I don't know who wrote this, or maybe I'm just not awake yet. During his 3.5 years as chair, he bullied crypto projects by opening numerous investigations and by threatening lawsuits costing hundreds of millions of dollars to a native innovative industry. In the process, he choked. I'm assuming it means choked innovation, driving it out of the United States to the embrace of the European jurisdiction, which is now proposing a legal framework for tokenized stocks. Jay Clayton did what Jay Clayton was supposed to do, folks. Just my humble opinion. I don't think he's the bad guy. I think he was doing a job he was hired to do. And apparently, quite frankly, sounds like Trump was taking credit for a lot of that. So who knows? Clayton's SEC instead told entrepreneurs and innovators, we won't innovate for you. During a draconian period when $1 billion was taken by SEC in fines, 5x more than their entire yearly budget of $250 million. Some for wrongdoing, but much of it was aimed at honest entrepreneurs trying to tokenize and modernize things like restaurant ratings, which the SEC quickly shut down. There are countless of similar stories, with the SEC today boasting during Clayton's tenure, they obtained orders for over $14 billion in monetary remedies. $14 billion that could have driven much innovation and could have encouraged much capital formation. This is obviously not written by an English-speaking native, which is fine. It is what it is. Instead, during Jay Clayton's oppressive tenure, so he obviously does not like Jay Clayton, whoever it is, we witnessed the biggest overreach by an unelected bureaucratic body that often bypassed the courts to act as a lawmaker, informing and enforcing policy over a very new space outside of the SEC's usual congressional jurisdiction. Elon Musk, a role model for many, found himself almost imprisoned due to what he called the Short Sellers Enrichment Commission. Wow. Despite much needed reforms of century-old laws, which is true, the SEC told the world no change was needed, whatever. The law was fine, as written in 1933 during the Great Depression, when there was no such thing as cars, let alone the internet or blockchains. Even after Congress demanded from the SEC reports on what reforms are necessary, the SEC dragged its feet and produced nothing so far. And this just goes on and on to beat up the SEC and Jay Clayton and whatever. So, like, I don't know. We'll see. Is this going to be a major boon for blockchain technology? Is Jay Clayton the reason for a lot of this? Or was he simply doing a job and quickly to be replaced by somebody else that will continue in this trend? Personally, I think a lot of things are going to be changing in blockchain technology. I mean, obviously with the IMF having met recently to discuss a lot of this stuff, and now even companies like PayPal now handling $20 million a day in Bitcoin trading volumes. I mean, think about it, guys. There are $20 million a day funneling through PayPal now for Bitcoin buying and selling, and you don't even have private keys. You can't send your Bitcoin from one person to another. You're pretty much just basically putting your name on a piece of paper saying, I gave you cash for this much Bitcoin, and that's it. You can't really do much else with it. You can just buy it and hold it, and then when you don't want to hold it anymore, you sell it. It's almost like trading on the Robinhood app. It's pretty much all on paper, and this kind of thing actually scares me quite a bit because I don't know how these orders are being filled exactly. If I go to PayPal and I tell them I want $100 million worth of Bitcoin, do they then go out and buy $100 million worth of Bitcoin and hold it in cold storage for me until I want to get rid of it? How much of this is floated? You know, like how much of this doesn't even really exist until, you know, with until withdrawals are made. Because in a sense, it's kind of like what the banks do, which is a big part of the reason why the banks are struggling so much, because they've been loaning against money that they don't even have, and it's only going to continue getting worse. Now, PayPal's going to be in this practice. I don't think I really like it, folks. As easy as it sounds and as nice and secure and safe as it sounds, I'm not sure I dig this. Americans are buying and selling some $20 million worth of Bitcoin every day on PayPal after the latter began offering its service just last month. According to Paxos trading desk, ItBit, some $4 million was exchanging hands daily before PayPal began offering Bitcoin services on October 21st. Now, around $25 million is traded a day, suggesting demand has increased by $20 million in the last 3 weeks. PayPal has some 346 million users and plans to expand Bitcoin services to their 26 million merchants. Yeah, that's cool, but I'm just not I'm not really with this. I don't really think I like it, and I don't think I'll ever be using PayPal to buy Bitcoin. I have no intentions whatsoever on doing that. Why Chainlink is being predicted to outperform Bitcoin, Ethereum, and XRP in 2021 by Olivia Brooke. Chainlink was arguably one of the best performing DeFi coins of this year. And as the year comes to a close, the market's general sentiment is that Chainlink is poised to take on 2021 with the same fiery momentum as it did this year. In a Twitter poll recently carried out by author Timothy Peterson, the crypto Twitter sphere voted for Chainlink as the most promising cryptocurrency come 2021, while the dominant cryptocurrency Bitcoin took second place. But there wasn't any Cardano in this poll, so doesn't matter to me. Clearly, the expectations for Chainlink is off the roof. It's off the roof. It's off the chain. Come on now. It's blockchain. It's off the chain, yo. But a bigger question is what the objective chances are of Chainlink living up to expectations and outperforming other cryptocurrencies, including Bitcoin, which have all been in the market for a longer time. Is Chainlink well positioned for a gargantuan bull run in 2021? Let's just skip the bullshit. The answer is yes. Because quite frankly, a lot of these projects that have shown promise and development and just positive inroads into the blockchain space are very likely going to do substantially well. I mean, there's no hiding that. Link could face some barrier in the near term. You know what's funny too is the was it Zeus Capital mock-up? I call it a mock-up because I don't think it's not really Zeus Capital, but it's somebody pretending to be Zeus Capital trying to short Chainlink to like 5 cents or whatever. And they keep coming out with new stuff to try and push the price down, and it's just not working. I mean, just so they know, stop wasting your time because it's not working. But that aside, I think some of the stuff that's going on is a little silly. Link, being a demand-driven network asset, only means that the number of network users influences its price. And if that logic is to be applied to Link's current situation, then Chainlink may have a hard time meeting up to the market standards. Recently revealed on-chain data recorded that Chainlink's network activity over the past week has declined by 27% and could plunge further in the near term. In 2020, Link saw its highest price in August, but ever since hitting $19.83, the digital asset is yet to test the same resistance levels. On the charts, Link is trading at $12 at the time of this report, but analysts who predicted $20 as a closing price for Chainlink by the end of the year are still yet to retract on their price predictions. Perhaps a flip in price movement is expected to change the game, though there's very little time for Link to catch up. Listen, Chainlink's going to do very well, but it is obviously, it's always a question of which cryptocurrencies are going to outperform the rest. Quite frankly, personally, I think Cardano is going to clean house when Goguen launches and everything really starts kicking off on the Cardano blockchain. Just my personal opinion, but I think that a lot of the speculation going on, look, Chainlink kind of had its day. A lot of people made a lot of money investing in Chainlink early on and then exited those positions for a lot of reasons. Some due to competition, some due to better technology that's coming to the space. And people are wanting to ride the technology wave. That's really kind of the name of the game right now. It's getting into a budding technology early and then being able to exit those positions at a height. Now, that's not to say that Chainlink's not going to continue going up and do well. Question is it going to do better than a lot of these others like Bitcoin, Ethereum, or Ripple, or Cardano for that matter? I think it's going to do well, but I don't think it's going to clean house the way I expect Cardano to. Now, onto the big news here. This is actually pretty significant, something that most of us have heard before, but I think we're starting to realize just how true this very likely is as we continue to move forward in the blockchain space in this bull market. Why a Citibank analyst is calling a $318,000 target for Bitcoin. And yes, folks, this is November 16th. of 2020. This came out today. The banks are borderline following the playbook created by Bitcoin and cryptocurrency believers in the past few years. Deny all ties to the asset class at first, try to disallow clients from banking crypto profits to their accounts then, and wholeheartedly embracing the sector later. Citibank's the latest to do so, after banks in Asia and even China have put on a positive narrative for cryptocurrencies in recent months. The bank had earlier banned crypto purchases using its debit cards as recently as 2018. Bitcoin shows gold's 1970 characteristics. Tom Fitzpatrick, a veteran fund manager and executive at the U.S. Bank, published a client note last week that compared Bitcoin's price rise to the one seen in the gold market back in the 1970s. He even predicted a price that would incite stock-to-flow model believers, that of Bitcoin reaching a six-figure price as early as next year. We're talking 2021, folks. Bitcoin move happened in the aftermath of the great financial crisis of 2008, which saw a new change in the monetary regime as we went to 0% interest rates. Now, this is what so we posted this on Twitter. Citibank Bitcoin technical analysis, target moon. And if we look at it, this is actually a CityFX wire market commentary by Tom Fitzpatrick, where he kind of goes into some of this stuff in detail. The first major rally on this chart as Bitcoin came into the mainstream was the exponential move from 2010 into 2011, high followed by a deep correction. This is interesting for two reasons, even though he gives three. The surge as it came into the mainstream was very reminiscent of what happened in gold as it was allowed to float in the early 1970s after 50 years of trading in a $20 to $35 range. The period with regard to the gold price was a structural change in the modern-day monetary regime as it broke the orthodox relationship between fiat currencies and gold, ushering in a world of fiscal indiscipline, deficits, and inflation. The Bitcoin move happened in the aftermath of the great financial crisis, which saw a change in the monetary regime as we went to 0% interest rates, negative in some countries, and a massive QE. So they're basically explaining the changes in the financial situation as it relates to the Fed and gold and other markets, and they've been kind of charting this out a bit. Let's see here. Let's show. Yeah. So here's the chart. Time will tell if we end up seeing such lofty levels, but the backdrop in the price action we are looking at clearly suggests the potential for a major move higher, nonetheless, in the next 12 to 24 months. And so they're pinpointing this December. Is that December 2021? Yeah, it looks like December 2021. So what's funny is they're basically pinpointing the same thing I've pinpointed multiple times now in so many videos over just the bear market. And a lot of these, and here's the thing, think of it like this. As those of us who are more or less in the know about the market cycles, and we've invested and we accumulate and we kind of understand what's happening while we're trying to educate those around us to understand what's happening in the market cycles. And now the big institutions and the big banks, all these people, now they're starting to catch wind. Who am I kidding? They're not catching wind. These people have known, they understood this for a long time. A lot of these companies were just really trying to position themselves better before they embraced it. But now they're starting to embrace it, which means that they have platforms, they have systems in place, they have foundations built to be able to embrace this technology and profit from it. And so now we're going to start seeing much more bullish and positive news from people that we've seen tear Bitcoin down, call it scams, call it names, this and that. PayPal was one of them. PayPal in 2018 called Bitcoin one of the biggest scams out there. Now they're trading it and offering it to customers. So this goes to show you cannot believe what the mainstream anybody tries to tell you, because we are nothing but lemmings to them. We are nothing but batteries, profit centers from which these major corporations buy laws that enable them to further profit from our very existence. And if they're telling us not to do something, it's probably a good idea that we do it while they're doing it, knowing that's exactly what they're trying to accomplish. So keep that in mind as we move forward. Something I've basically been saying now for a couple of years. The analyst had a positive take on Bitcoin's infamous price corrections, which have seen the pioneer cryptocurrency drop by as much as 40% in a single day. However, Fitzpatrick said that these unthinkable rallies were in fact the kinds of patterns that sustain a long-term trend. He also called Bitcoin the new gold, drawing comparisons to the yellow metal's rise in 1970 and the eventual effects on both its price and positioning in the broader world economy since. It is an asset with limited supply. It moves across borders easily and ownership is opaque, said Fitzpatrick, adding, while Bitcoin may be subject to more regulatory constraints going forward, it is a natural store of money to avoid this. Indirectly, the argument can be the debasement of fiat currencies by creating high nominal growth and inflation. Some celebrate, some caution. Meanwhile, the bank analyst's $318,000 price target for Bitcoin was met by both accolades and skepticism among crypto circles on Twitter. Citibank did 5 years of blockchain research and finally realized Citi has scrapped its plan for a JPM coin like bank-backed cryptocurrency. Banking giant built listen. The overall theme to this whole video is everything's going up. I mean, listen, I'm not a financial professional, right? I'm not licensed for anything. I'm just some dude on the interwebs, but everything's going up. Even the crappiest of crap coins are going to have their day. They're going to get pumped. Some of the coins that are probably quite literally absolute crap coins that are worth nothing are very likely to be pumped in the bull market because speculators are going to be trading them. And if it's available on an exchange with any kind of volume at all, there are going to be pump and dump groups. Illegitimate coins are still going to get pumped. They're still going to go up. It's what we've seen now multiple times. But the cream that has risen to the top throughout the bear market are going to continue pumping even harder. And I'm going to be working on a video at some point, hopefully this week, where I go over what use case actually means to price valuation and price action in an asset. Because I believe that as we continue to move forward, use case is going to be, it's not just about ideas and teams anymore. It's about use case and the potential for adoption. Because it's that potential for adoption that's ultimately going to help carry projects from a bull market through a bear market and enable these companies to continue churning and burning and making enough profit that they can sustain themselves and continue to grow in the following bull market. And there's a system to that too. And I think ultimately the projects that truly capitalize and capture the interest of the general public in ways that makes it as easy as humanly possible for the general public to adopt these projects, those are the projects that are going to reach the moon before the rest. And I'm going to be putting together some ways of really figuring out which projects are likely going to be able to capitalize on that most. So until next time, guys, thanks for joining me. Woot woot, $318,000 Bitcoin. I believe it's coming. At the bare minimum, I know we're going to see six figures by the height of this market. I'm ready. Are you? Let me know in the comments. What do you think is going to happen in 2021? Grow your coins, folks. See you again soon.